What if I told you that the biggest investment mistake people will make in 2026 isn't choosing the wrong stock or missing the next big crypto? It's blindly following outdated advice in a completely new economy. Right now, millions of Americans are putting their money into places that worked 5, 10, even 20 years ago. But here's the problem. The financial world has changed. Interest rates, technology, inflation, global markets, everything is shifting. And if you don't understand where money is actually moving in 2026, you could be stuck working for money, while others quietly build wealth. So in this video, we're breaking down exactly where smart money is going in 2026. Across stocks, crypto, and real estate. And more importantly, how you can think like a smart investor, even if you're just getting started. Let's start with something most people don't realize. 2026 is not just another year. It's a transition phase. For years, the US economy was driven by low interest rates and easy money. Borrowing was cheap, investing felt easy, and asset prices kept rising. But now, we're in a different environment. Higher interest rates mean borrowing is expensive. Inflation has changed spending habits. And technology, especially AI, is reshaping entire industries. This means one simple thing. Old strategies don't work the same way anymore. In the past, you could invest in almost anything, and it would eventually go up. But in 2026, where you invest matters more than ever. Let's talk about stocks. Not all stocks are equal anymore. In fact, the gap between winning companies and losing companies is getting wider. Smart investors in 2026 are focusing on 3 key areas. 1. Technology and AI. Companies leading artificial intelligence are shaping the future. Think about it. AI is being used in healthcare, finance, marketing, even everyday apps. Businesses that adopt AI grow faster, reduce costs, and dominate competition. That's where attention and money is going. 2. Index funds, the silent wealth builder. While everyone chases hot stocks, smart investors quietly build wealth through index funds. Funds tracking major indexes like the S&P 500 allow you to invest in the entire market. Less risk. Long-term growth. It's not exciting, but it works. 3. Dividend stocks, cash flow focus. In uncertain markets, cash flow matters. Dividend-paying companies provide consistent income, even when markets fluctuate. For many Americans, this becomes a foundation for financial stability. But here's the key idea. Smart investors don't just chase growth. They balance growth with stability. Now let's talk about crypto. This is where emotions often take over logic. Some people think crypto will make them rich overnight. Others think it's completely useless. The truth? It's somewhere in between. What's happening in 2026? Crypto is maturing. It's no longer just hype. Major institutions are entering the space. Governments are paying attention. And technologies are becoming more practical. Key assets people are watching. Bitcoin seen as digital gold. Ethereum powering decentralized apps. Smart approach to crypto. Instead of going all in, smart investors treat crypto as a small part of a bigger portfolio. High risk, but also high potential. Biggest mistake to avoid. chasing hype. If you're investing based on trends or social media, you're gambling, not investing. Real estate has always been a powerful wealth-building tool. But in 2026, it's not as simple as, buy a house and wait. What's changing? Higher interest rates equals higher mortgage costs. This means fewer people can afford homes. But it also creates opportunities. Smart real estate strategies. 1. Rental properties. Consistent cash flow, especially in high-demand areas. 2. REITs, real estate investment trusts. Don't want to buy property directly? REITs let you invest in real estate through the stock market. Lower entry barrier. More flexibility. 3. Location matters more than ever. Cities with job growth, population growth, and strong economies attract more demand and higher returns. Biggest mistake: buying property without understanding cash flow. Real estate is not just about price. It's about income versus expenses. Now here's the part most people miss. It's not just about stocks, crypto, or real estate. It's about mindset. Smart investors think differently. They don't chase trends. They study systems. They focus on long-term growth, not short-term excitement. They diversify. And most importantly, they stay consistent. So before you invest in 2026, remember this. The goal is not to get rich quick. It's to build wealth strategically. Understand where the world is going. Position yourself early. And make decisions based on knowledge, not emotion. Because in the end, the difference between people who struggle financially and those who build real wealth is not luck. It's understanding. If you found this helpful, subscribe to Mind of Wealth. Because we break down complex financial ideas into simple strategies you can actually use.